Hi, this is Kerry Artek with Wicked Stocks, bringing you your daily Apple report for Monday, March 11th, 2024. But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already, subscribe to the Wicked Stocks YouTube channel, share the content if you would with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever. Let's take a look at the charts. I'm going to go back to this one, big picture, work our way into the day itself. We did indeed fall, violate, settle below this channel top that it held beautifully a few months ago on the way down from that December high. And 173.64 all week long. That is our resistance for the week. I have it as a 3-star resistance because we are approaching support in the 165, 166 handle, actually, which I'll get to in a moment. But I do also want to drive home the point that 173.64 is below not an equally significant, but a significant level in its own right, 174.77, which is just the descending channel bottom, this former channel bottom. So we really have just over a 1-point range between 173.64 and 174.77. That will be their static level all week long. We have, other versions on the daily chart that I could show you here. For instance, 174.69 that fits inside that area. But we're going to keep it simple this week in terms of your sellable resistance. And I'm really talking to 3 to 5 day swing traders, because I think that's about all we're looking at. Maybe 1 to 2 week swing traders, where you sell that 174 handle resistance, 173.64 to 174.77, essentially this area here, and you're anticipating with present volatility within 3 to 5 days. But with more recent volatility within 1 to 2 weeks, the 166.90 channel bottom. That same channel bottom on the weekly chart is found at, where are you? I need to find that. There it is. All right. Here it is, 166.99. Now, this is the formation that I've been wanting to show you now for the last few weeks, which is what if we actually close below 166.99. I don't want to get too far ahead of myself, but this is your bottom picking territory, 166.99 on the weekly chart, 166.90 on the daily chart. We've got 165.32 as your 1% threshold to the downside, and that is for sell signal clarity. That if we were to close Friday, for instance, at 165.32 or lower, we then have a go with sell signal to 136.02 over the next, this could be 2 to 3 months, could take 3 to 5. This could be a complete washout within 1 to 2 months. It's really difficult to gauge. We've seen that kind of volatility before in this market. But I think it would be kind of a 2 to 3 month variety, where if we close this week, below 166.99 by the 1% margin, we're talking kind of a May, June target of 136.02, where yes, we could bottom out for the year, but then we could round back up within 2 to 3 months of that. That'll take us, into, I'm just kind of guessing here, into August, September for a rally back into the 166, 167 handle. That could contain buying then through the rest of the year. So this could be a new paradigm. And I think I've been indicating as much, that if we close at 165.32 or lower this week, I think we enter a new paradigm. Rather than aggressively buying pullbacks, you're selling that for the next 2 to 3 months into the 136 handle, where you take profits and yes, go long through the rest of the year but your near term 2 to 3 month outlook is then merely back into the mid to upper 160s. So I'm going to leave it at that. Now on the way down, of course, you're also well aware that we have this former channel top on the weekly chart at 162.38 to 163.80, which I've reduced also to just a 3-star weekly support. I do think there's a solid case here that if we violate, say, 166.99 on Monday, Tuesday, we could test Wednesday, Tuesday, Wednesday, let's say 162.38 to 163.80, and then by Friday we are closing at or above 166.99. So this is the kind of the head fake, breaking support, testing other meaningful support, and then managing to recover in the final hours of the week to close at or above this key trend-defining pivot point. And if we do close at or above 166.99, this is still a market to be bought at this price point if your time horizon is anywhere from 3 to 5 weeks out to 3 to 5 months, or even through the rest of the year as far as that's concerned. So let's go back to so we've got resistance here, 173.64, 174.69 on the daily chart, is 74.77 on the weekly chart. That is your resistance for the week, sellable resistance. Downside, we do have 170.73. That is the high of the low. We close right at that level on Friday. So I don't see that as a strong coincidence. That happens actually quite frequently for meaningful price points. The market oftentimes will close right at a meaningful price point. So pushing or opening today above 170.73 allows another push into the mid 170s, let's call it. Maybe not that high, but 174.77. If we close today above 174.77, remember that is a weekly chart level. Tuesday we could test 178.12 and then fall away through the rest of the week. And so, you've got these weekly levels, and I wish I could say that just closing any day this week above 174.77 is your green light for bullish continuation as we move into April trade. But I really can't sign off on that until we actually close above this newly formed descending 1/3 speed line. And this is, over the next couple of weeks, converging anyway with the 174.77 level. So it is a narrowing range of resistance. But it really is, I think one way to play this, if you can do this, is to sell 174.77, short sale it, let's say, or liquidate a long position maybe from earlier in the week when we actually tested the 166.99 area. Once we test 166.99 within 3 to 5 days, 2 weeks at the most, we can push back into the mid 170s. And so you're selling 174.77, even short selling 174.77 in anticipation perhaps of the mid 160s within a week or so of doing so. But in terms of going long, as we move through the rest of March and into April, that presents itself pretty well with a settlement above 178.12. And so I have 178.12 as a 4-star resistance. I think this is a sellable resistance into April, and we can fall away from here back into the mid 160s. I think this is your 2 to 3 week time frame, actually. Selling 178.12, buying back at 166.99, buying 166.99, selling at 178.12. It's about as simple as that. And if we close above 178.12, we have a 2 to 3 week buy signal to 188.85, a descending 2/3 speed line that could by that point contain buying into May. We could fall away, and if settled above, would be a significant buy signal as we move through the second quarter and into the third quarter of this year. And so we'll talk a lot more about these levels then. But for right now, I just want to get back to the day itself. We've got 170.73 as your soft intraday pivot point, above which that 173.64 to 74.77 area in reach, where we could top out for the week and fall away. This is a 3 to 5 day swing trade opportunity in the 173.64 to 174.77 region. If you sell this short and we fall away from here, you're taking profits, of course, in the 166 handle. You've got the 166, I'm having trouble finding it. You've got 166.99 on the weekly chart. And on the daily chart, do we show it on the daily chart? Yes, 166.90. Let's talk about the downside today. If we break 166.90, which is 166.99 on the weekly chart, we probably could have made this 90 instead of 99. But in any event, I told you that 1% below 166.99 is 165.32. It just so happens today we have a descending channel bottom at 165.23. So this is your zone of support. And I will say that if we close today below 165.23, you can expect within a day or two at the most this former channel top at 162.38 to 163.80. I don't want you to fall in love with this, but this may contain selling for the week. And if we then close the week back above 166.99, we are still in a bottom picking mindset that is longer term in scope. But as I said earlier, if we close at 165.32 or lower, do I show that anywhere? I do believe I do. Right here. That is the 1% violation of 166.99. No good reason to be long Apple. If your time horizon is the next 2 to 3 months, I would then expect 136.02. Until then, bottom picking galore here in anticipation, perhaps, say over the next couple of months of 188.85 and higher as we move into later year. I'm going to leave it at that. Please click like, share, subscribe. Check out wickedstocks.com. I'll be back tomorrow with Tuesday's Apple Report. You have a great day.